Hey everybody, my name is Paulina Beck. I'm an enrolled agent, and today we're going to be talking about taxes. We're starting a little bit early, so I want to give at least a minute or two before we give everybody a chance to join, get settled. I'll give you a couple promises. First, that I won't bore you to death, put you to sleep. As some of my clients have told me, I am not a Charlie Brown adult, so I don't put them to sleep, and I don't sound like wah, 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 wah. So we'll try to make it fun and interesting and then hopefully get everybody settled. So let's give everybody a little bit, one more minute or so, then we'll get going. And if anybody has any questions, please feel free to drop it in the chat, DM me. I'm more than happy to answer any questions, answer anything that you might have seen on social media. Just overall, happy to answer. So, okay. And then, yeah, let's go. Okie dokie. So today what I want to talk about and what everybody signed up for is when you're talking about your taxes, how do you make them more predictable? How do you break this ongoing anxiety, stress cycle that we have every year? Many people come to me and what they're dealing with is, right about now in January, they're like, oh yeah, taxes, new year, I got to work on that. And then around March, April, they're like, hey, can you file an extension? And then we get to extensions, which is September, October. And they're like, oh yeah, let's work on it. And then they're stressing out. And then before you know it, it's October. We're filing at the last minute. And they're like, oh, I just got it done. And then before you know it, it's 2 months. And now we got to start the cycle again. So that is a horrible cycle to be in. And what I have been able to do with my clients is actually break that tax cycle. So that's what I want to spend our time together doing today, is going over that and seeing how just changing kind of like the approach and the way we just interact with it, the mindset around it, can have a completely different result for your taxes. So what I was talking about earlier about the January, March, April, October again, I call that the brace for impact cycle. And I call it the brace for impact cycle specifically because there's 4 stages to it. I call it, the first one's avoiding. So you're like, I don't want to deal with that. I haven't figured it out. I haven't closed my books. And then the second one is like, okay, well, I guess I got to figure it out because I'm going to have to write a check, or maybe I'll get a refund. I don't know. I did buy some stuff this year. And then the deadline, and sometimes your accountant's like, hey, we got to get this done. We got to file it. We don't want to get in trouble. We don't want to pay penalties. And then we start hitting panic. And then panic goes into like this in between of you file it, and by the time you do it, it's already December again. You're like, crap, I gotta do that again next year. So let's break this down a little bit more. So when you're in this cycle of avoidance or bracing for impact, which is bracing for the bill, when you're in it, you're like, I'll deal with it when I have to. And you're like, I know I need to be making quarterly payments, and I know that I'm sure if I ask my accountant, they maybe could tell me what I could do to save some money. Maybe I'll buy a car this year. They tell me, I see a lot that you can buy a car, but you're like, I'll figure it out when I get there. Then under guessing, okay, I don't know, but I'll maybe start asking questions. Usually that's the guessing, or it's like, well, last year I did about the same, so I'm guessing this year should be about the same. That's usually how it goes. But it's still not necessarily better than avoidance. It's just that at least you're on the radar of your accountant. And then when we start getting into panic, you're like, oh man, I got to do this. Now I got to pull all the bank statements, figure out how many expenses, how many credit cards did I use? Did I put that on my personal? Did I do that on my business? I'm not sure. So all in all, we end up with a situation where you're highly stressed out. You're trying to find and turn over every rock to find that extra penny. And the reality of it is the goose is cooked already at that point, because most of the planning that happens, or the way you start breaking out of this cycle, happens during the year. So by the time you're in October, we're just hoping and praying that you bought something that you don't remember, that was highly expensive and totally deductible, so that we can include it on your taxes. So how do we actually start breaking from it? Usually it's after you've had a really bad bill, have had to enter into an installment agreement or payment plan with the IRS or the state, And you're like, I don't ever want to do that again because that sucked. So you're like, okay, I'm not going to do that again. So this year I might start in December and start asking questions. I might start in November. You start getting through the process or starting the planning a little bit earlier. And then you at least use last year's numbers to be like, okay, well, this year I'm going to make sure I have enough money set aside. So you're like, okay, last year I owed 10,000, let's just say, or you owed 40,000, whatever the amount would be. You're like, okay, let me start putting that amount aside so that I can make sure that once I'm done paying this payment plan, I don't ever have to be on a payment plan with the government. I'm just going to pay them, call it a day, best thing that ever happened. And then the panic is I don't want to be scrambling again at the end of the year, trying to figure out if I should buy a car, a plane, a boat. I've heard a lot of things that you can buy. So why don't I start asking questions in July? I would say February wouldn't be a bad idea. So you start doing that. So again, this is a cycle that unless you actively do something about it, it's going to be really hard to step out of it. So I came up with something that helped me and it's helped my clients. I call it the North Star method. And what we do in it is it has 3 pieces. I call it the know, choose, and plan. So know is the first thing I do with anybody I work with is if we did nothing but just file your taxes and make sure things were done correctly and timely, what would your bill be? And we always find that number. We do it by usually working off, I usually do a mock tax return. And I say, okay, well, let's plug in all your numbers if we were doing it again with the information we have for this year. And if we did nothing, I call it the do nothing number. So if we did nothing, what would that number come out to be? So here you'll see that this number changes and includes states. So like if we did nothing in this case, the bill would be $32,031 to the IRS and $8,430. So that already gives us something to benchmark against, to look at, to consider. So we're like, okay, so if I do nothing, I do no planning, don't look for things that I can write off, deduct, put on my taxes, that means that's the check I'm going to have to write by April 15th. Okay, now it's not this mysterious, crazy number out there in the atmosphere that we're like, I don't know what that number is. I don't know what that's going to look like. Usually, I will tell you 95 out of 100 times, what most people are scared of, what I've been scared of, has always been figuring out this number. Once we do it here, now everything else is just downhill because everything we choose from here is going to be compared to this number. So this becomes your baseline. This is the number to beat. That means what would you rather do? Would you rather write the IRS and the state a check of this size? Or would you rather find a strategy that lines up with your life, lines up with what you're doing in your business, and actually helps you save money while making this number go down quite dramatically? So you stop guessing, and now it becomes choosing, which is the exact next thing in the North Star method, choosing. So if we already know the number we're choosing, or like the number we have to beat, so let's just say in this case, let's grab a round number, $35,000. Okay, so we're going to have to say, okay, what makes more sense? Would I write just a check for $35,000, or do I want to give to certain types of charities where maybe I can get the right level where I actually get to write off $35,000 of taxes? Maybe that could work. Or maybe you're like, oh, I get a discount from my supplier if I pay early. So not only do I get a discount, but I get to, have more supply. So I get to do a year-end sale or something. Again, these are all things, but we always have to go back to what's the number to beat and does it make sense in your life? And the making sense in your life is usually the thing that most clients struggle with. And I say that because they start thinking that everything can be put in their tax return. And we can sometimes, as long as the rules and everything lines up. But what they start putting like the strategy before their own life. And here's an example I'll give you. My kids are still young, so they can't really work for me. I don't necessarily know if I would put an 8-year-old to do tax returns quite yet, maybe a 17-year-old, definitely, but maybe not quite an 8-year-old. So does it make sense to put my kid on payroll? Probably not. If I had a 17-year-old that, wanted some part-time work and wanted to do the work, want to learn the business, let's just say, then it might make more sense. So it's not that putting your kid on payroll is a bad strategy. It's just, it doesn't make sense in my life where I'm at right now. Same thing with cars at the end of the year. A lot of times people are like, well, I'm going to buy a car. And I was like, okay, were you planning to buy a car already? Yes. Okay, great. So let's make sure everything lines up so you get the most tax efficiency out of it. But if you just got a car 6 months ago, I don't think it makes sense for you to get a new car again. Those are some of the easy ones that we can look at. One that I have seen for people that have high W-2s but don't have, I would say, like free time. Like I have a family member who's in medicine, and they're always asking, like, oh, should I get into real estate? I'm like, real estate is great, but do you have the time to actually be in real estate? And if you don't have the time to be in real estate, are you going to be able to get into an investment or some way get into real estate that actually makes sense for you and you're actually making money and not just like shuffling papers around? Because that's what happens a lot of the times. Is people are like, well, people say real estate is good. People say Bitcoin is good. Like, I'm like, I don't know. You can, that could be a conversation with a financial advisor. But if you're talking to me from a tax perspective, we got to look at all the pieces. And am I suddenly going to have to make you walk around with a logbook and do all these other things so that you can write it off? If it meant that you had to spend an extra 1,000 hours doing something, doesn't it make more sense to find something that maybe doesn't require you to work 1,000 hours just to write off $3,000? Maybe. That's just me. So choosing, as much as it is beating the number before, it's also about making sure the deduction or the strategy that you're pursuing makes sense in your life. So a lot of time we spend more is on how does it make sense in your life than just beating the number. Okay. So now let's talk about, you already know the number. So let's just say it was $35,000. Let's just say in this case, you are an LLC and now you decide to become an S Corp. Okay, great. So we saved it. It's cheaper. You don't have to do too many crazy things. Let's go for it. Now, this is where the math never lies. Somebody that I know always says the math is the path. And here's how I usually bring it up to clients. So we always find that do nothing number. In this case, we put $87,500, right? And then we're looking at two strategies that basically use the same thing, but the way they show up in your life are completely different. So one, we have buying a luxury vehicle. So let's just say you're like, hey, this is the year. To be fair, I don't think you're going to find a G-Wagon for $65,000, but that's the number I'm going to use right here. I'm going to buy a G-Wagon. I'm like, great, love that. Please send me pictures. And then we're like, okay, how does that play out in your taxes? And I'm like, okay, cool, let's go through it. Are you going to finance it? Are you going to lease it? Are you going to buy it but put a note on it? Okay, cool. So let's talk through that. And then let's just say you are deciding to buy it and you are going to pay for it all up front. You're like, I have the cash. I don't really want to deal with financing it. So I'm just going to buy it. Cool. So then the next question is going to be like, how much are you going to use it for work? How much of it are you just using for you personally? Because the odds are, if it's your only car, you're going to use it for personal stuff. Like you going to the grocery store is not going to be depending on what you're doing, likely not going to be a business expense or a business use. So let's just say now that you're using it 40% of the time for personal, 60% for business. Okay. That means that we're not going to be able to take the full $65,000 and write it off on your taxes. We're only going to be able to take 60% of that. So let's do some quick math here. So that means you're only going to be able to write off $39,000. Okay, great. That's still pretty good. But your bill was $87,500 and you just spent $65,000 on a car. So that means you still have money that you still have to pay the government. Plus, you already bought a car. And then let's just say you want to keep the car for 3 years, 4 years. You're not going to sell it for the amount you bought it for. It's probably going to be worth, pennies on the dollar. So this asset didn't make you any cash flow. So that means it didn't make you money. You didn't collect rent. It's not worth more than when you bought it. and lowered your tax bill. Yes, it did. But if it wasn't that you already were going to buy the car, did it make sense to pay more than $87,000? Probably not. It doesn't mean the car strategy is not good. It's just, it didn't make sense. Versus if we do the same thing, and one of the strategies we look at with our clients is equipment leasing. Let's just say you were to get into it, and you can finance it because that equipment is going to be leased out. There's a lot more details that we can go into. But now you didn't really spend the full $65,000 in like buying it. You financed it, and you're going to get some rent every month. And now that rent's going to pay for the loan. So now you're not spending any extra money. The asset's producing it. And then when you buy it at the end, when you sell it at the end, it hasn't lost as much value as the luxury vehicle because there's like a secondary market. Okay, same idea. You bought something, we're using depreciation to write it off on your taxes, but one made you money or kind of paid for itself a little bit. The other one just cost you more money. So those are the things where when we look at the math, we want to really understand before you execute so that basically you don't get sold on an idea that you're like, yeah, they told me I can get into real estate and I would do these things. And then, when it all said and done and the document is filed, you're like, did I just spend $150,000 to not pay a bill of $87,000? I wouldn't do that. I would have rather probably paid $87,000. So those are the things that we look at when we're choosing. And then I like to show the math to my clients and be like, okay, here's if you did nothing. If you did everything just like the way you were doing it, here's if you do one strategy, here's what you do another. The math never lies. There's not an emotion. There's not a sales pitch. It just works it out for it yourself. So want to make sure we walk through that because once you pick what you want to do, now you have to plan. And you have to plan, okay, do I need to set up an LLC for this? Do I need to set up payroll? Do I need to do all these things that are additional things that sometimes take time? Like if you set up payroll in some states, it might take a couple of weeks for you to get all the documents together. So that means like you can't run payroll today because you haven't been registered. You have to look at, okay, what are the specifics? What are like the fine print on that strategy? Is there something I'm supposed to do? For example, if you're going to be considered a real estate professional, and there's little caveats to all this, and there's exceptions. So this is not going to cover everything, but okay, how am I going to fit 750 hours? Oh, okay, maybe I don't have 750 hours to like focus on this, or you know what? I'm not finding any properties that are, going to be a good deal for me. Okay, so maybe we don't do that. When do you have to execute everything by? So for example, if you're going to put money in a retirement account, that account better be created or have been created by December 31st of that year. Otherwise, I don't know if you can contribute. They won't let you. And then as always, cost versus savings. Are you really saving money, or are you, for example, sometimes you want to put money into the retirement account because that's the best investment. You're investing in your future. You're making sure that is covered. Like that is a great reason to put money in your retirement account. Is it always the best reason for tax to like compare it against the bill that you would have paid otherwise? Probably not. But in the long term, it might be the best choice. So when you consider all these things, now you can start making like a project plan. And if you start early, like what I'm doing with my clients right now, we had these conversations already in September, in October. And now in January, February, I'm having conversations of like, hey, did you get the documents we needed? Great. Okay. Do you want to meet next week to start like filing your taxes? And they're like, already? I'm like, yeah, because we already did the work. And instead of doing 10 hours, 20 hours, all in a matter of weeks, we broke it down throughout the year. So here's the next thing. What happens if you did not have these conversations at the end of the year? What happens? You're like, this is the first time anyone has talked to me about this. I would say it's not too late. We can always look back and see what opportunities still exist. Probably not the same as all the ones that were available last year, but maybe we can stop the bleeding for last year's return that we have to file right now. And maybe we can start planning for this year. There's always a place to pick up from, and there are things that you can do. The main thing that I want people to take away from this is that, It doesn't need to be perfect. You don't need to have all the answers. You need to know everything you're going to do this year. But if all we can start with is if we did nothing, that is already going to make a difference. And then from there, if we're like, okay, especially my real estate clients, you're like, I don't know how many houses I'm going to sell or any deals they're going to make this year. Be like, fair, it's so early on. I think I know how my year is going to go, but I don't know that yet. Why don't we just pick a number that seems reasonable? Like if you've been in the business for a while, you kind of know what like a bad year looks like, what a great year looks like, what an average year, like no effort year looks like. So let's pick a number that you're comfortable with and plan from there. And as the quarters come by, let's check on that number. Okay. You know what? I thought this is the year that I would make $1 billion. Great. If we're in March and we haven't cracked $10,000, again, there's still room for $1 billion, but I'm not going to make a tax payment based on $1 billion when I've only made 10. So you want to start at least having something that you can work from. And when you can work from it, you can plan. And when you can plan, you can choose. So all of that comes back to taxes can be predictable. If you're working with the right person who's going to walk you through the process. Most of us have not been taught this. In high school, nobody teaches you. In college, nobody teaches you to know how to pay your estimated taxes, how to figure out the tax strategies. Even as an accountant, you get trained on how to prepare a return, but nobody's saying, hey, if you made this change, you could save $5,000. That's not how you're taught. You're taught, be compliant, file the paperwork, do the right thing, but nobody's telling you to strategize. But for you to strategize, you have to know your numbers. You have to create a plan and get going. So if any of this has, stood out to you, you're curious about, please feel free to DM me, ask me questions. If you see any strategies out in the internet, I tell my clients all the time, please send them to me. If I don't personally know what they're talking about, I'm more than happy to research it. If I do know what they're talking about, I'm more than happy to also give you the fine print. One that I actually talked about this week that I did want to share was somebody brought up, can I write off my Rolex? And I was like, valid question. And it all depends, which is not the best answer, but in that case, it was the right thing. And with the person I was talking about, it came down to like, well, I have conversations. And I was like, I hear you, but it all has to come back to like, how are you using it? And do you want to have to justify it if you got randomly selected by the IRS to this? I don't necessarily know that something being a conversational piece has the best audit chances. I'm not saying it doesn't, if you have a really good accountant, like me, maybe you can get away with it. I would say, what are we ultimately trying to do? And with this client, which I adore, we talked about, okay, what you're really worried about is paying the least amount of taxes possible. So let's kind of handle it from that angle and see what we could do that technically, if we saved you enough money, you could buy yourself a Rolex and not have to explain it or have to come up with a way of like justifying all your taxes. I would take free money that I don't have to justify to anybody over money that I have to explain, log, show, prove why I can do that. Free money is way better. Unrestricted money is way better. That's why it's harder to get, but worth every penny. So all this to say, the Rolex story ended up that we're not writing it off, but we are finding in strategies where he could buy a new one or get back the money he spent on it other ways without having to explain why he's using a Rolex for business. So that is all. I will be hosting these webinars every 2 weeks. So if you have any questions in the meantime, would like to have one-on-one time, please DM, email. We're always available and more than happy to help. Okay. Happy Thursday, everybody. Hope you have a lovely weekend and stay warm.